I'm going to tell you something your professors and even some finance gurus aren't saying yet. Right now, you are living in a very specific, high-leverage waiting room. But on June 1st, 2026, the door to that room is going to lock. If you're a student right now, you're probably dealing with the usual: high rent, expensive groceries, and the constant burnout of trying to figure it out. You might think, I'll start investing once I have a real job. That thought is the most expensive mistake you will ever make. By June 2026, the global economy is hitting a massive pivot point. AI is moving from cool tool to economic engine, and the entry price for building wealth is about to skyrocket. In the next 5 minutes, I'm going to show you why June 2026 is your deadline and how to use just $100 to make sure you aren't left behind. Stick with me. This isn't just about money, it's about your freedom. Economists are calling our current era a K-shaped recovery. One side, the investors, is seeing their wealth explode because of AI productivity and tech growth. The other side, the non-investors, is getting crushed by sticky inflation, where the price of bread and housing stays high even if the news says inflation is down. Why June 2026? By mid-2026, the Federal Reserve is expected to have finished its major rate-cutting cycle. When rates stay stable or drop, big money pours back into the markets. If you aren't already in the market before that surge, you're going to be buying at the peak rather than the floor. Don't wait for a perfect amount. If you have $50, put it in a low-cost index fund like the S&P 500 today. You aren't trying to beat the market, you're trying to be part of it before the June surge. Let's talk brother to brother. You think you have time. You don't. If you start investing $100 a month at age 20, by 60, you could have nearly $90,000 more than someone who started just 5 years later at 25, even if they invested the exact same amount. Those 5 years you wasted waiting for June 2026 to pass, they cost you almost $100,000. That is the procrastination tax. It's the invisible fee you pay for being too busy to click a button on an app. Download an investment app today. Set up an auto-invest of just $5 or $10 a week. It's less than a Starbucks coffee, but it stops the procrastination tax immediately. I know you're burnt out. I know the thought of researching stocks feels like another homework assignment you don't want to do. Here's the secret. Successful investors are lazy. They don't watch the news every day. They don't check their portfolio every hour. They build a system so they don't have to use their brain. The science: decision fatigue is real. The more choices you have to make, which stock, when to buy, the more likely you are to do nothing. Automate, set it and forget it. Don't bet on one meme coin, buy the whole market. Focus on the gap. Your job isn't to be a Wall Street pro. Your job is to keep the gap between what you earn and what you spend as wide as possible. Look, I get it. $100 feels like a lot when you're a student. It feels safer in your bank account where you can see it. But the safest thing you can do is actually the riskiest. Keeping your money in cash while the world evolves around you is like standing still on a sinking ship. June 2026 is coming whether you're ready or not. You can either look back and say, I'm so glad I started when it was cheap, or you can say, I wish I listened to that video. I want you to be the person who took the leap. If you're committing to starting before the window closes, comment June 2026 below. Let's hold each other accountable. Hit that like button if this gave you a wake-up call, and subscribe to our community of students who are actually taking control of their futures. Share this with your roommate who's still waiting for the right time. The window is closing. Go open your account. I'll see you in the next one.